We got the Bitcoin bounce, and it looks like it just broke back down, but look at the targets. Keep these in mind, whether or not we get a bigger sell-off going into the end of the year, or we just continue pumping here into the FOMC meeting and beyond. We got to make sure we're looking at the levels, because when we're looking clearly at the Bitcoin chart as it stands right now, what do we see? We saw the breakout to the upside coming down. Let's see how this actually played out. We see the price action dropping. Oh my God, what's it going to do? Pumped right to the target that we had of that previous range low, this range high here, coming all the way across. You can see all that interactivity of where price action has had trouble. This is kind of the gateway to go into that CME futures gap. Will we get it filled over the weekend or sometime next week? Remember, it's more and more likely, almost guaranteed now, we're going to get rate cuts. What do we need to be paying attention to? Everybody that's tuned in right now, as you are here, make sure you're hitting that like button. Drop a GM in chat. Type in GM and then bull, or GM and then bear regarding what you're feeling about the price action this week. And everybody, let's get into it. Let's get this sort of hold screen going. I want to see you get active. I want to see the follower account go up. I want to see the memberships go up. I want to see that like button go up. And we're going to be getting onto this in here in just a moment. Doing my part, getting this shared out to the multiple different channels here, retweeting the space, getting involved. I hope all of you are well. I hope you're doing well. I hope everybody's feeling good this morning. I hope you're feeling grateful this morning. I hope you're feeling appreciative of yourself. I hope you're feeling loving of your family. But let's look at these charts. Let's look at the signals, and let's talk about what these rate cuts mean. Is it actually going to bring a pretty big market downturn? Is this breakout that turned out to be essentially an immediate rejection, was that a trap? Is there another trap brewing? Let's get into it. Let's talk about these charts. Let's talk about the signals. Let's go. The market never fails to keep us entertained. We got that nice move this morning that felt so exciting. Looking at the chart, this is the move I'm talking about. Look at this. Oh my God, it's absolutely going to go to new all-time highs, only to get rejected. And I warned you all about this. Everybody watching tuned in, and I hope you are subscribed, because I warned you about a move up here into this $113,000, $114,000 zone, and actually getting a potential rejection before moving higher, because we've seen the double move washout going back and forth before finding the equilibrium, and then the move happening has happened over and over and over in the crypto market this last couple years, especially with the world waking up to crypto. So when we're looking at this on this sort of midterm macro here on the 8-hour chart, we had the falling wedge, beautiful. We had the breakout, even more beautiful. We had the retest down and then the launch back up, which we could not break past this previous range high. But what we have done in the process is form an inverse head and shoulders. The question is going to be, is this going to maintain a low, meaning how low this price goes on this candle? Is this going to maintain a higher low here? Or are we going to come back down and sweep the lows, meaning that pushing the price down to trap that liquidity, get people betting short, getting the bulls to give up, to trap them down here? This would be a bear trap to come back up. Currently, this move, especially looking at the 15-minute time frame, currently this move to the upside was a bull trap coming back down. But you've all been prepared. I've been talking about this with each and every one of you. But as you guys roll in, I want to see you guys type in GM and type GM bull or GM bear in terms of what you think their price action is going to do over this weekend, because we saw a massive gap up form, meaning the futures market, the Bitcoin futures market, which closes Friday evening and opens Sunday, if the price moves, because the regular, Bitcoin market still trades, the crypto market still trades 24/7, 365, but the traditional interest in this, the futures, closes on the traditional market schedules. So if the Bitcoin market that's open 365 moves over the weekend, and then you have a price much higher or much lower than where it closed on Friday, then you get these gaps where price action tends to come down or go up and fill. And when we look at this on the chart, what do we see? Let me pull this up on the 15-minute chart just to show you exactly what I'm talking about. We've got this. Hold on one second. Oh, boom. There we go. Oh, okay. There we go. Come on. I believe in you, computer. And this is that gap we're talking about right here that we need to pay attention to. And I talked about the price action pushing up near this range, getting people very hopeful. Because we have a gap, we're going to fill it. Well, in this case, we pushed right up to it and got rejected right on the bottom side of this range. Does this mean it's over for the bulls? I don't think it's anywhere near over for the bulls. I think we got a lot of price action to go. The question is going to be, the economy right now feels, all the data coming out feels like it's a lot weaker than people are expecting. And even though we're going to get the rate cut, does that mean we can have a sustained bullish continuation following this? Or are we just going to get sort of an impulse pump up into and maybe shortly following it, and then a larger crash? We got to keep our eyes on the prize right now, and also make sure that you're not over leveraged in your account. And remember, being over leveraged in your portfolio doesn't just mean you're trading leverage. Being over leveraged can mean you have too much exposure that if it were to drop, it would put you in a bad position, even if it's just spot holdings, meaning you bought Bitcoin and you're holding it. There's no even leverage on it. If it puts you in a bad position, if it drops and you can't handle your life costs, then you are over leveraged. We're getting that time frame, even though I'm still expecting pretty substantially bullish price action into 2026. It doesn't mean we can't have a bigger correction into the end of the year to then have that continuation finally happen in 2026. But if that puts you in a bad position, take note of it, because when we're looking at the market right now, I want you to notice something. We have been hovering at that $4 trillion market cap area for some time, and we've been under it now for just a little bit. We're seeing some weakness come in across the board. And what is that weakness? Well, first off, the US economy has barely added any jobs in the past 3 months. And not only have they not added many jobs, they've been revising the numbers down. In fact, there's also a report from the Kobesi letter that suggests that there may be the largest down revision in the history, or at least in the last 20, 30 years, of about 950,000 jobs that have been reported having been there that are going to be revised, saying those jobs don't exist, which would be pretty bad outlook for the economy. So although we're getting a high likelihood of rate cuts, doesn't mean the market's going to boom. Well, it could mean that for Bitcoin. The question's going to be, are we still in the phase where Bitcoin is going to be very heavily correlated in the investor mentality, the investor narrative, as we see with the S&P 500 and traditional stocks? Because what we've seen historically, look at these, basically the federal rate hikes. This is a drop. Well, look at what the market did. Along with the drop, we also saw a drop in the market prices. Okay, here's a dot-com bubble. Look at the interest rates. Oh, drop. What do we? This was corresponding with a big drop in the market. Yet again, we saw right here, big drop. We did get a bit of the sort of sell-off, the impulse sell-off, but then this rebounded and actually ended up much higher in a very near term. But this also was corresponded with trillions of dollars printed in the matter of just a few weeks and months. Okay, what we're seeing here, will it play out again? Or are we going to see something like this with maybe some sort of correction and then the continuation? Or are we going to see a bigger, more sustained downtrend, recession, and then the continuation up? Everybody, I mean, it's anybody's guess. And it took 205 years for the US to achieve $1 trillion in debt. 205 years, okay? That year that it happened was 1981, when we achieved $1 trillion in debt. Yet, in the last 2 months, since September 2nd, back to July 2nd, we've increased the US debt by $1.1 trillion in 2 months. So on the one hand, we have historically seen when the Fed interest rates get cut, we've seen downturns in markets, but we're also at the stage now where money printing is not only an inevitability, it is something that is prescient. It is absolutely required to keep our economy going. The question is, have we learned our lessons yet? And maybe we're not going to print. I mean, I can't see that is going to be the case. So there's going to be some chop coming into this, where there's different speculators, different investors with different narratives and understanding of basically global finance, and also what's going on with money printing and the US debt and Fed interest, all these. It's all just like, you got to take your shot, and you got to figure out what your time horizon is, because I think a lot of people are going to get wrecked based on the different possibilities of what's going to happen following the rate cuts. Now, continuing on, we got, more bullishness. It's just opening up in the crypto market space. $1.7 trillion banking giant Citibank says Bitcoin and crypto will account for 10% of the global market by 2030. So on the one hand, we have the Fed interest rates might get cut and the stock markets typically take a downturn. We also see gold prices going absolutely to the moon. This is people de-risking outside of the traditional markets in terms of, the investments, the risk hedges and the risk. Everybody's going into gold. But now we have this other thing that has been around 16 years, but the world is just waking up to Bitcoin and starting, not waking up yet, but starting to understand that the plumbing of the future is going to be built on blockchain, which is going to render massive upside in those assets. Some of them, not all of them. The question is going to be, does that mean this is going to start taking off now with massive increases in prices, price appreciation here in the near term? Basically, I would say by near term with global markets, I mean over the next 1 to 3 years, or is this going to be something that's going to be pretty choppy with pumps and dumps and, round trips and all this stuff for the next 3 or 4 years. And then we get this mass explosion. We don't know. We can't know until we look at it in hindsight. So you got to pick in place where you're diversifying your money, where you're taking your shots, and making sure that you're not over leveraged. So on the one hand, while I'm very bullish, I'm also very risk conscious because we're entering some sort of uncharted waters here for what's going on, especially in an emerging market class. So I'm very excited, but I also want to just share with you a little bit of caution. Now, on the other side of that, we're also seeing some major trend shifts in Ethereum to Bitcoin. Ethereum flipped Bitcoin in the 7-day centralized exchange spot volume. This is people going into like Coinbase, Kraken, Binance, not on leverage, but buying $100, like 100 US dollars or 100 Canadian dollars, whatever, and getting that exact amount in Bitcoin or whatever assets they're doing. In this case, we're talking about Bitcoin and Ethereum, and Ethereum flipped the spot volume of Bitcoin for the first time in the last 7 years. So there is a little bit of a waking upness about Ethereum, especially with people like Tom Lee going on mainstream news media outlets and raising $20 billion to stack into Ethereum, with Bitmine. Then you also have SharpLink, which is adding a huge amount of Ethereum to their reserve, and not to mention what's going on with stablecoins and the deployments there, not to mention what's going on with Ondo and global markets, and that essentially being on top of the Ethereum chain. There is so much happening right now coming at you, and every second it feels like it's so bullish. It makes you wonder when you look at the prices on the chart, when we look at the prices, if everything is so bullish, then why are we seeing price action that is so frustrating? Now that's the 15-minute chart. Let's go to the 8-hour chart. Well, part of the reason is when you have an overwhelming bullish fundamental growth of an asset, retail is not paying attention to that. They're excited about pumps or scared about dumps. And the mass market, including big money capital, is not yet fully awake to what is about to happen within the blockchain and crypto ecosystem and how the entire world is moving on chain. So you stand to benefit in an enormous way right now if you can keep your hope and keep your fear in check and just watch these fundamentals develop. Go to places like DeFi Llama, tune in here on BitLab Academy, Discover Crypto, get inside of our Discover Investments Group Discord, which is pinned in the top of the live chat there. We're trying to keep you guys on the right side of the data here so you don't get trapped in the emotions and chop yourself out and then just get, completely disinterested because it's frustrating. You need to think longer term with the majority of your money in this market and take shots with smaller percentage allocations, or use something like a prop trading firm where you can get leveraged exposure in a very mitigated risk way, which we're going to be doing a lot more of on the Discover Crypto channel. I'm going to be doing some afternoon streams throughout the week, Monday through Friday. They're starting next week. We're going to be talking about that as well. But when we're looking at Ethereum and we understand the massive growth and impact of the recent legislation, the empowered regulatory bodies coming in saying, yeah, let's get involved and allow people to develop and invest and really broaden out what is happening in the crypto ecosystem, then let's welcome price action doing this. I don't care if it comes down to 2,800, if it comes down to 2,500. This would be a steal of a price within the altcoin ecosystem. If Ethereum does this, your other alts are going to completely tank. So either have a long-term mindset, or you need to I can't tell you to exit or enter or this or that, but you need to realize that there's going to be better prices that are going to present over time, and you're either going to be willing to buy or you're going to be getting chopped out in your emotions every step of the way. When we're looking at this on Ethereum as it stands right now, this looks pretty damn bearish. We got a double top. Let's look at, we got a decreasing volume here with a little spike here, but it's bearish volume. We had bearish divergence coming into this move. We've talked about this. This actually comes all the way back. Here to July. We also have a bearish money flow that's come all the way across. Does this mean it's over? No, I'm looking at an 8-hour chart that has suggested there's weakness coming into these zones. There's fears about what's going on in the economy. Yes, we have positive bullish, legislation and empowerment and ETH reserves. And why isn't it going up? Well, sometimes when the best opportunities are present, the market makers and big money players do is everything possible to make you believe it's not going to happen. So let's welcome that. And if we do get those drops, we're going to get some incredible assets that we like on sale. And when you look at it that way, you stop becoming a victim of the process. Okay. Now, when we come over here, Link, also one of my favorite assets in the entire crypto ecosystem, in some ways more than Bitcoin. And this is bearish, but were we unprepared? No. In this zone right here, when we started getting this sort of triple top, we talked about a potential coming back to a neckline, potential form of a head and shoulders. We got the head and shoulders. Then we talked about a potential drop down into the low 20s, potentially even under 20. And when we see that, there's that measurement from the top of this head, which is, you have the shoulder, which is a bump here that's low, a bump that's high, which is a head, and another bump that's low, which is the other shoulder. Shoulder, head, shoulder. This is, it looks, call it like you see it. You measure from the top of the head to this neckline, which is the support area. And then you just take it from the neckline and measure it to the downside. Now, I'm still of the opinion that although we have this target, I'm still of the opinion that this is going to be more of a bear trap. I am stacked and loaded in Link. But I will have dry powder on the sideline that if this drops, I'm not going to sell this because this is bearish. If this drops, I'm going to add to my position but I am more of a position trader for periods of time trying to catch a large move. For people that are trading without doing long-term hold of Link, then the breakdown of this, the retest here, and the subsequent start of a breakdown, that would have been a pretty good sell signal, especially with bearish divergence that came in leading up to that. Aerodrome also had a pretty nice move this morning. Oh, it was so exciting. And then immediately rejected. Let's look at this. We had the bounce here, rejected back at the trend line, bounce here, higher low, break. Oh my God, it's above, bull trap, back down. Okay, does this mean it's over? No. This has to do with the risk narrative in the market right now. There's more indications we're going to get a rate cut, but understand what that means. Why isn't the Bitcoin and crypto market absolutely running away? We have the Fed rate cuts that are now signaled near 100%. So why isn't the market just absolutely booming from this? Well, we have to, one, see if that rate cut happens, how much it's going to be, but then also realize that the rate cuts mean they need to soften their stance because things are breaking. Now, there's going to be people that are going to trade that in a bullish narrative, bullish sentiment, thinking this is going to be good. But there's also going to be some de-risking players out there that are looking at broader data, understanding that their, credit card delinquency rates are absolutely going to the moon. Bankruptcy is going to the moon. Commercial real estate's not doing well at all. Housing prices are falling because there's no buyers, because nobody's got money. So on the one hand, the markets and the charts and the patterns say, the market's about to explode higher, but then the economic data says, man, you better look at some caution. So you need to practice a bit of a bifurcated view on the market right now of being prepared for exponential bullishness while also sort of risk hedging yourself and how you want to act and what your exit strategy is so you don't get caught fully round tripping like many of us have done many times. Now, when you come back over here, we see, I have some other data I wanted to share with you. Where is it at? Let's look at the liquidation heat map. because when you notice this came up and was getting sucked up into the liquidity zone, kind of tapped into it a bit, but then immediately got rejected. But when we zoom out on the liquidation heat maps, let's go to the month. Let's go to the month. It's going to load here in just a moment. So noisy chart, very noisy chart. Now, what is this? If anybody's never seen this or you've seen it a lot, you don't know what it means. The brighter the color, especially when there's big groups of them, the more amount of liquidity is there at that price level. What do you mean at that price level? Here's the price levels on the right, and you get these bands that are right at those price levels. So right here at 118,950, there's $205 million of liquidity of people that were betting short, that if the price went back up to there, they are forced to close those shorts, AKA buy the market. And there's, all of this. Another one, almost 200 million at 119.8 directly above us. You can see if you move your mouse, and this is a free tool, coinglass.com. And then you can go to liquidation heat maps and you can see now we're in a bit of a trap zone here. There's some people going long. There's quite a people that have gone short. I think the market's going to do everything it can over the next 4 or 5 days to get people convinced that it's super bearish, only to then rebound and push to the upside. And we can see that when we're looking at the NVRV. We're nowhere near top. The market is taking advantage of your emotions, okay? I think we are going to get some form of a pump beyond $124,600. Are we going to hit those targets we have up here at 158, 213, 265,000? This next month and a half is going to tell us what the shape of this market's going to be moving forward, especially following these rate cuts. Because when we come back over here, where is it at? Right here. All this liquidity above us, and understanding that historically speaking, we've never been this low to achieve a top of market cycle. Then we've also got the fear and greed index. You can see the colors. When you get into the green, it's very bright green. When you get into the dark orange, dark, almost red, very fearful. Look, this gets into the very bright green before a top. And when you zoom out on this chart, you will have seen that we've really never gotten there except for this pre-halving pump to $74,000. We got a little bit here when we got into the 106, 109, but on the subsequent pump, nowhere near this greed level, the euphoria level that you would expect. And then you look at the reserve risk. Do you realize this entire bull market, the black line is a Bitcoin price, the entire bull market, we have never really broken out of the incredible asymmetric, the risk to reward. The reward has far outweighed any risk for upside price action. You can see back here, this great buying zone, essentially based on this metric, has been this entire zone here leading up to right here where the parabola really starts. This is when it got overheated. Only here. We have not even gotten out of the great buy opportunity zone, even where we're at now. So let's just be aware of that. And then you consider the advanced NVT signal. Look at this. Market cycle top right here, 2013, 2014. We went parabolic on the MVT signal, the blue line. Okay, the top here, 2017. Look at this. Boom. We went parabolic on this blue signal. There's nothing here that's out of context. We've just ranged sideways. The move, in my opinion, is still coming. Okay, we look spent output profit ratio. Are people selling in profit or loss? Well, on the way here, yes, we've had some pretty big profits here, and this is a lot of de-risking, I think, selling, taking profit from some very old players. So this metric is a little skewed. However, on the way up, you see these momentary moves where people come down, boom, into this loss. All the way up, boom, into this loss. A little red flag we see right here. Okay, boom, all the way down into the loss. And then we got the full, look at 2017. On the way up, you get these revisits back to loss. This is from the short-term holders selling and loss. Well, we just got one of those little signals right there, much like we saw right here. A quick little sell and loss. You can barely see it right there. I think we've got some more room to go to the upside. And then again, the everything indicator, look how low it is. Nowhere near in this overheated zone. And then of course, everybody, we've got the targets we've talked about. So we need to be paying attention, because looking at the altcoins, everything in the market minus Bitcoin and Ethereum, this is what the total 3 is. All you have to do is click on your chart, type in total 3, pulls it up, right? And we can see we've only barely, we barely broke to new all-time highs and came right back down. And we have not made the move that the entire market's not only expecting, I think is overwhelmingly likely, especially with the deployments and integrations that have happened in this last year and a half. I think that the feeling in the market right now is perfectly set up to wreck the most people because everybody's expecting the 4-year cycle. The question's going to be here, is the degradation of the economy and the data that's coming out about it going to truncate or shorten or actually mute what's possible to the upside, although everything is so bullish about what is expected because the capital channels and the ETF and the corporate treasuries and the government, it's so bullish. I cannot believe that we're not going to continue pumping up, especially with money printing on the horizon coming into 2026. But at the same time, you have to understand the economy. It's starting to look like the numbers are coming in stronger and stronger. Like we may have some trouble that people are not expecting, but are we going to print our way out of it? I know I'm exiting the system. It's all about Bitcoin for me, taking some flyers with other things like chainlink and bittensor and Aerodrome. But at the end of the day, you got to pick what you're going to do. Do not over leverage yourself because we're in the most exciting time in history in the changing of the global financial guard right now as everything gets integrated on the blockchain. So do not fall victim of the emotions of the moment. But I got to run, everybody. I love you. It's a short one today. Got to go head over to stream something over there on the Mario Notfall channel with those fam. But big love to you guys. Have a wonderful weekend. I love you. I really do. I hope you find gratitude. If you get mad today, if you get frustrated, I'm not even talking about in the markets. I'm talking about anywhere, walking, driving, road rage, somebody messed up your food. Let's just take a moment, forgive ourselves for those things. Let's act with love. Let's act with kindness. Even when somebody's being a jackass, maybe they're having a bad day. It doesn't mean you need to. So I love you guys. That's all I got today. Adios, muchachos. Adios, muchachos. Thank you for coming. Thank you for always tuning in. Adios, muchachos. Thank you for being here. Each and every one of you are friends. Hope you guys really have a great weekend. That's all I got. Adios.